Evening, everyone. It's around 5:30 on Monday, and this is video number 210, and it's the closing commentary on the market for today. On the screen, there's a chart that I've never shown you before, but it was the outstanding mover of the day today. This is the Russell 2000, and it was up $52, the futures were. The Russell itself was up 48.82, which is over 4%. What's interesting with this is the fact that this has lagged behind in a very serious manner. As you can see, from the highs to the lows, we've really rallied, less than a third of the way back, whereas most of the other indexes, specifically the NASDAQ, the S&P, and the Dow, have rallied about 50% more than this. But today, this was it. And what was interesting about it was that the big names, the FANG stocks, were all lower on the day. Volume was a little on the light side again, and the advanced declines were about 3.5 to 1, which is fairly healthy. The Dow was up 358, or about 1.5%. The Nas up about 95, which was 1.1, and the S&P was up $42, or 1.47. So there's your first chart. The next one that I want to show you is an old favorite that just still cannot seem to get out of its own way, and that's the oil. And the oil today was down 4.6%, 4.16 to 12.78, which was just short of 25%. Now, the closing low was on the day that the front month, the May, last Monday, went negative, and that close is at 11.57. It looks to me, unfortunately, like this one is going to, at the very least, test it. And the last chart is the gold. I held off buying it because it was closing so close to the low. But I think that the setup here is, as I mentioned this morning, rally, consolidation, test of the breakout, rally, consolidation, and maybe we get another test of the breakout a little lower, around 1700. The low today was well above that at 1720, but based on based on overnight, we may or may not get a test that we can actually do something with. The other group that was incredibly strong were the financials. We had Citigroup up 8%, Bank of America up 6%, JP Morgan up 4.25%. On the strength side of the sectors, as I said, financials first, industrials, and then retail had a monster of a day today. It was up across the board. The weak segment was consumer staples, but the matter of fact is that it was up just less than the other 10 S&P groups. The only other one I want to mention is General Motors. They suspended their dividend and suspended stock buybacks, which is kind of a joke because this company is probably one of the worst of the poster boys for bad action by a board and a CEO. The stock was up $0.50 today, which was 2.3%. But let me give you an idea of what General Motors has done. Over the last 8 years, the company spent $140 billion on stock buybacks. Its entire market cap right now is about $100 billion. And over this period of time, we had 29 consecutive quarterly losses and lower revenue. And yet somehow The CEO, I might add, the outgoing CEO, managed to accumulate 100 million in stock compensation. This is absolutely the poster boy for bad activity by a board and a CEO for self-enrichment. In any event, I'll get off my soapbox. It was an interesting day, and be safe out there. I'll be back in the morning.